Good morning. Welcome to Admiral Markets. My name is Chris. Today we're going to take a look at strategy webinar looking at the Forex commodities and stock indices. First of all, though, be aware of this disclaimer. It explains that this webinar is shown to a global audience. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out more details and information. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, so today, strategy, basically looking at the market structure that involves looking at trend and momentum, that looks at basically patterns and Fibonacci levels, checking out if there are any filters like support or resistance that could block a trade from occurring. And last but not least, looking at basically what levels I want to take those decisions, what kind of triggers, and what reward to risk can be found at those spots. All right, so with that said, let's head over to take a look at the calendar. Today we got a lot of things going on. ECB meeting, Bank of Japan had its basically just a few minutes ago, or very recently, its interest rate plus press conference, and we saw the yen move. We'll take a look at that in a second. And later today, we have the Fed FOMC day today, and it's not expected that the rate will move in September, perhaps in December. Ned, by the way, wrote a blog explaining why we think so, and he specifically, in his opinion here, Traders Blog, U.S. Fed Decisions Market Impact, so you can take a look at that if you like. So otherwise, let's head over to the market. Good morning, Bob. Good morning, Edith. Now, there could be some background sound. I apologize for that. Here, somewhere close by in the vicinity, someone is remodeling. So, yeah, nothing I can do about that, I guess, at the moment. So sorry for that. I hope it's not too bad. And next week, that should not be any problem, I hope, because then I'll be back in Prague. Now I'm still for a few weeks in a different location, having a bit of a few days off as well. So, but this weekend I'll be back. So hopefully there will be less noise. Let's see. Let's get the platform going. Hopefully you can see it now. Not yet. There we go. Let's go to the euro dollar. All right. So looking at market structure. Well, market structure, a friend of mine made me very excited about market structure. I don't know, let's see, 8 years ago or so. At that time, I was not much into looking at patterns, looking at waves. I was more focused on price action and indicators. My friend was very excited about it, and it made me excited too. And I've never really looked back since. It's really how the market moves hand in hand with waves, with fibs, with patterns is remarkable and very interesting to see. Of course, not every pattern plays out. Some patterns are a bit of a mirage, or a bit of the water that you see in the desert. But sometimes that just happens. I mean, humans tend to, of course, look for patterns. Sometimes those patterns are not there. But I think it's safe to say that with experience, as you go along, you'll be able to weed out at least some of them that are false and see the ones that are more reliable and are more tradable. And as experience grows, that becomes easier. And patterns is just one very good way of filtering the market, in a way of understanding the market better, seeing through its structure and trying to simplify that. If we would not have patterns, then everything would be unique. Every single movement would be different. It would be very difficult to comprehend the market. We would not be able to basically digest that much information that quickly. So patterns are the key, stringing it together, making it easy to analyze, and therefore very, very important in my way of trading, at least. So that's what I want to look at, is looking at the market structure today. Patterns is an important part. Other thing are trends, momentum, and support or resistance. Those three are my triangle that I look at. And with that in mind, I try to see where, what space on the chart is interesting, what is tradable, and where. So from that perspective, today, I think specifically interesting are the euro dollar, dollar yen. I think AUD New Zealand I was looking at this morning, I think could have potential. So I want to focus on those three today. Pound, of course, on our list usually. That was very interesting yesterday and Monday. Now, perhaps not so. I think that if you looked at the video recap on Monday, I was talking about a rejection of the pound at Fibonacci levels. So perhaps if you joined me in my thinking, you took a trade there, and you benefited from this down movement. If not, then I don't think now is the best time. Basically, if you're interested in looking at the video, then you can see basically here in technical analysis right there in analyzing USD strength. That's basically the Monday recap. All right. So with that in mind, let's move on. Euro dollar 4-hour chart. We saw also a rejection at the fibs, also indicated on Monday. That could have been one way of trading, basically to bounce at one of these three fibs. Doesn't really matter that much. The higher, of course, the better turn, the better price, the better entry, the better reward to risk. If you manage to get it higher, great. If you got lower, then still great, because price eventually did turn without invalidating the 112.50 cutoff level or invalidation level, and price is now has hit 111.25 target, the first target. Oh, perhaps the first target. I'll talk about that in a second, and has made a substantial movement already. So from this point of view, I think that it's going to be very interesting to see how price responds as it retraces. There could be more downside left. There could be, this is the 50-minute chart. Let's go back to the hourly. There could be, or 4-hour, sorry. There could be more downside left. This is a pretty strong 4-hour candle. If we zoom in, that's, I think, dominating at the moment. If price basically stays below that candle low, basically stays below 111.50, 60, I think there could be more downside to 110.85, the next target, perhaps even lower, 110.50 throughout today. Then, of course, we have that news event, that the FOMC, that could be something on its own, and price could react volatile up and down, depending on what is said and how it's said. But until then, I think that as long as price stays, this could be below 111.60. I think this could easily be a retracement. This 4-hour candle is not closed. It looks bullish now, but mind you, that's not closed. That could easily turn into a bearish candle at the end of this 4-hour or doji, and then continue in the next candle lower. So I see this interesting retracement potential for more downside to these targets. Now, maybe the lower targets is not so likely, because I think that the market might not push that far with the news event in mind. So maybe a conservative target is more prudent, is a bit more appropriate for today specifically. So that's why when looking at the 50-minute chart, I'm interested to see how is this retracement, this bullish retracement, going to move up, and is it going to turn, and how is it going to turn? Those are all very interesting questions from the 15-minute point. Now we see bullish momentum, but I can see, for instance, the supply-demand zone right in here. We talked about that last week on Thursday. Clear momentum, clear sideways zone, and then a continuation. This zone itself could already be a turning spot, or should be the turning spot, if my analysis plays out. So this is the critical zone. I want to see how price responds when it gets there. If I see any bearish price action, any candlestick pattern on the 15 or hourly, I think that it's worth trading myself with the stop loss above that zone, with the targets in mind I just mentioned, and I think that could be interesting. We got a good question from Z10. Is this a double bottom at the 50-minute chart? And I would not consider it double bottom. One of the reasons why is because this particular movement is kind of like one piece. So, but if anything, I do agree with you if you say this is a inverse head and shoulders on a 5-minute chart. I would say yes, definitely true. I think that we can see the left shoulder, the head, and the right shoulder pretty neatly forming here. Could be on a minute chart too, by the way. Doesn't matter, but on this lower time frames, you see that I think clearly. Price has broken through that particular neckline and is marching higher, clearly in a bullish momentum here. But I think that it is going to run into resistance most likely. But that remains to be seen. And if it does, then I'm interested in shorting it. That's my view on the euro dollar. If we zoom out to daily, I think that we can pretty much see the bearishness continuation. Friday was that big bearish day. That's why, partly one of the reasons why I said on Monday I want to short it as it retraces. 2D's fibs of that daily candle basically up somewhere around 112. That trade is fully on its way and is looking good. If you're in that trade, then probably the best, in my opinion, is just to put the stop loss above here. Lock in 30, 40, 50 pips and put the target at, what was it? Well, the target remains to be seen. That really depends. I would probably aim it at 110.86 myself to get out before the news event. But that depends from trader to trader. Some might want to be a bit more risky and aim lower, hope for a good news event. Some profit is locked in and just hope for continuation. That's another way of doing it, I guess. It's a bit riskier, of course, as you can imagine. With a news event like that, the volatility might spike it up, hit your small profit, and move lower, for instance, just to warn you there. So what else? So yeah, the daily candle basically was part of the reasoning why Monday seemed bearish to me, the break. And I think that we're seeing continuation down to support around 110.50, 110.75, 110 area, where there's a trend line of a daily chart. There's a part of the contracting triangle there. So we got space down to that bottom. And there price will have to show its intentions. Is it going to make a bear flag, for instance, at the bottom of the triangle? Then it could break lower. Or is it going to be an impulsive bullish bounce that could retest orange trend line or even the 78.6 fib here on this chart? Besides the double bottom or head and shoulders that I mentioned, Z10 mentioned double bottom, divergence is the question from Z10. So let's add an oscillator first of all so we can see that. And great comments there, Z10. Appreciate that. Let's take a look. I already can probably say that, in my opinion, this divergence is not yet a factor. And indeed so. And the reason why is that this is potential divergence. And the reason why I call it potential is because basically this down move is ongoing. It could be finished, yes, and then it will turn into divergence. But from my view, how I look at it, this move down is not yet over, not confirmed as yet. You can see that the oscillator is still growing lower. So if this price action continues lower, is there a sound problem? Testing 1, 2, 3. Anyone else does anyone hear me? All right. Bob, do you hear me again? Okay, great. So this down move basically is not over yet. So do you see that difference there? That this awesome oscillator could still keep growing, could keep falling until it breaks the previous low. We don't know that. We don't know how far it will continue, right? And then it could exceed it. Most likely it will not, though. I agree. but it doesn't mean that it has to turn now. It could still fall a bit to the next target. The awesome oscillator could fall also a bit, but not as much to break this low necessarily, right? That's very possible, and most likely indeed will happen. If I look at my wave analysis, then I don't expect this awesome oscillator to break the previous bottom indeed. But it doesn't mean that this wave 5, this last push here, is necessarily completed right now. And how do you know when it is completed? From my perspective, if it either breaks above the zone here, that's one thing. That's a big warning that it's not going to continue, in my opinion. Or if 5 to 6 candles not break this low. All right, 5 to 6 candles. We got one candle not showing a lower low. That's critical in my opinion too. If it lacks 5 to 6 candles, no lower low, then I confirm that divergence. So is that clear? At least is my view. Is that understandable? The reason why I use 5 to 6 candles is because of the fractal. In my opinion, that's the number, and I've heard other traders say that as well. By the way, although I only found out about their opinion after I kind of figured that 5 to 6 was ideal. But the fractal nature of the market, in my opinion, on these time frames, 5 to 6 is ideal, because then the market is showing hesitation. So it's a different level of fractal. If we would add a fractal to this chart right now, we would not be able to do that, unfortunately. But we would see a fractal of 2. A fractal of 2 is more beneficial on probably a daily chart or weekly, higher time frames, even monthly, obviously, as well. That's a higher time frame too. As the structure is less complex, it's simpler. The lower we zoom in, the more complex it gets, the higher the fractal number I think is. So although 5 and 6 probably works well on our 4 hour, it might not be even the best on the 5 or 15. It could work at occasions when there's momentum. But if there's corrections and complex corrections, then maybe 13 could work better, for instance. All right, so I don't use fractals that often on lower time frames, only when I see momentum. But so 5 to 6, I would use specifically for sure on an hour and 1 hour and 4 hour. I still think you can use it on higher time frames too, by the way. But there, the fractal of 2 also becomes more valuable, or might be even more valuable. I don't know. Originally, Bill Williams figured that the fractal of 2 was most valuable on stock index daily chart, I believe, or was it commodities? I think a stock index. And he figured out that 2 was the fractal number behind that particular combination. All right, so let's see. It's time will tell whether this is a scale-in. This is basically a scale-in. If anyone joined me on the shorts in here, then this is a scale-in basically. And the cool thing about scale-in is that there's already profit locked in, 30, 40, 50 pips. If the entry is made around here after the turn, basically not yet now, but after the turn, the risk could be around 15 pips. So the first trade, in a way, covers the second trade, and some plus profit still. All right. Pound USD, I am hesitant at this moment. Yes, it fell nicely. Yes, it's in a good downtrend. But this last push here just made a lower low, and I am skeptical that it could continue after this. There are 5 waves finished here, like this. And here too, there's a bit of a difference. Yes, it made a lower low, but there's a wick. It looks more like a double bottom as well in a way. So I think that one could argue that here there's more divergence present. Divergence is a factor, I would say, here. Between these bottoms, you can see that. We've had a turn. Look at this turn here as well. You see that turn here? Going into green. You see if you want to make it easy, you don't want to count candles or use fractals. You can look at the green of the awesome oscillator. As it turns green, there's a good chance that the swing is over. So I think that there's a good chance that this swing is over. We got a fifth wave of a fifth wave. So it looks like I think that this push is running into some exhaustion. It's overextended in a way, to a certain way, to a certain degree. I think we're going to see a retracement based on that. I would not want to short it, but I do think that after retracement, it's still good for shorting. There's tons of momentum in this market. Looking at the 4-hour chart, a good push, and I think that after the retracement, there could be a continuation of that. I don't think that this is the end of that, considering the momentum to the downside, but it could be a temporary pause. Also, another reason why there could be a bounce, trend line here from the 4-hour daily chart, right? It could be in a bouncing spot. As I was saying to Edith, in fact, that last week, that this bar would be a good one to short at around 132.70, 132.75, 133. And it turned at 132.75, right at the lower end of that range, and it's fallen all the way down here to about 340 pips so far. But I also told her that watch out for the bounce here. Watch out as it gets back to a support. It could make a bounce before perhaps breaking, or maybe not breaking. What could happen is that we're in a triangle. And let me show you that this could be the A here. Let me open my drawing to it. It would be a bit handier. Just give me 2 seconds. The triangle could be a factor here. And therefore, there might be a break later on. That's definitely one of those scenarios. I will tell you in a second here. Okay, I got it. I got it now. Let me show you. All right, so take a look at this. Here, A, B, C. So that could be the correction, or it could be extended with a D and an E. All right, so if it breaks below the trend line, there's no D or E. If it bounces substantially and breaks above this trend line, let me make that orange. Oh, quickly. If it breaks above orange, then it's most likely has completed a D, and it will make an E, which should not break the top here, turn around, and then we should see the downtrend continuation, I would say. So from that perspective, it's going to be interesting to see how it bounces here. In general, I think shorting makes sense because either this is a mild wave 4 correction, then we would expect to break lower, or this is a B, C correction. If that's the case, there's still this part to short, the B part, the retracement here. So how this pound USD reacts here will tell me if I'm interested in basically where to short, but also if I'm interested perhaps in longs after that. Because if it makes, for instance, a 5-wave here, then I would expect an ABC and then the bounce here for a move up higher like this. All right, so in that case, then shorting here at the red arrow and along here at the blue arrow both make sense. However, if price does not make a 5-wave up, but instead makes a bear flag or some kind of mild correction, then I'll be more interested in shorting it at the turn or at the break and not looking for longs. So what is the best fib at this moment? I think that for the moment, let me take a look at my wave analysis here quickly to see what fib belongs best to which wave. And we'll move on then after that to the dollar yen and to the AUD New Zealand. So let's see. pound USD. All right, so basically it is completing a green 3. So I'm looking for a fib from 133 top still. 133 top is this one apparently. No, it's this one. No, I'm not sure. Hang on. Maybe I need to zoom into the hourly chart. Let's see it a bit better. All right, from here to here. Okay, good. So this fib probably the best at the moment. And I would expect price to either probably turn it to 38.2 fib. That's the most likely. And otherwise, the alternatives could be the 50 or the 23.6 at the very max. So it should stay, of course, below this trend line and turn roughly at the 38 at 130.75, I would say. So let's see how price gets there. And if it does look corrective, then that looks like a good shorting zone from my perspective. I think a safe stop loss, in my view, is above 131.50, above this bottom, above the trend line, and above the 61.8 fib. So not exactly 131.50, probably 131.60, 63-ish. And the target, for the safe target would be 128.50, but a more aggressive target could be 127.50, 126, 125. There's a lot of potential there if it breaks this trend line. All right, so that's the view on pound. Let me now take a look at dollar yen. Of course, by all means, any questions, feel free to chat. Alrighty, dollar yen. Very, very interesting. But it's been interesting for already very long. So it never really materializes. So I'm not sure if now is the moment. Maybe not. We had a yen event just a few seconds ago, but well, there is a bullish reaction. Look at this outside bar or engulfing. Well, it's not engulfing twin, but look, strong candle, and I think that could be a first sign of a upside to come after this if it breaks this trend line. So we've had already a substantial triangle here. I think that I'm still in the long myself. Somewhere in this chaos here, I took a long based on the fact that I think the price will respect the support level and will bounce at these fibs that you see here for a bigger move up. My vision is that this is my analysis of the market structure is that this is a first indication of a reversal, that this is a correction, and I'm expecting the same continuation, same force to continue that would break the downtrend channel. That's why I took a short in this zone, as I'm expecting that correction to finish. I'm expecting the move up. So when am I wrong? Well, basically I'm wrong as soon as this bottom gets broken. All right, but I'm not expecting a move below 100. Small difference there, but okay, still. 100 is the 88.6 fib 2. I am expecting price to go up to at least the minus 272 target, if not further, to the minus 61.8, or if not further than that. But these are conservative targets for the moment. If this is a reversal, go a lot further. If this is a correction, an ABC correction, then it might struggle with these targets. What else? Well, what is the turnaround was obviously somewhere at these fibs, but the breakout would be if price shows, as I said Monday, a strong 4-hour candle above it or daily candle above this trend line with the close near the high. Let's see, got a good question. What do I think about the Fed today? Could it change the picture? It always can, but I don't think it will. And I think that the rate will stay the same. I think that they're going to postpone it till December. And I would say that December there's a decent chance, I think. How much, really, I don't know if it's important. I could give you a figure, but it doesn't really mean much. I think there is a decent chance that it will happen December. It's a tough spot for, in a way, for the Fed. I think just because if they do hike, they could be prone to what is called an action bias, the need to do something after all those years, to show that they're still can have some influence or that they can impact it in a way. That is one part. If they don't do anything, um, it kind of would look a bit odd in a way, because last year there was promise of more rises, not a single rise, not a single rate hike throughout the whole year. Wow, that would be quite something. But there is that option. I mean, if they think that there's not enough push in the economy, then they might, just as well keep it the same. So that explains his opinion there, our opinion, but he wrote it in the blog, by the way. So you can find out more there, analytics and blog. All right, so that's the dollar yen. If it stays the same, I think it depends on the tone as well, what they say, how likely, what does the market think the odds are for December? Will the odds go down or up? I think that will probably be more important than if it stays the same today. So depending on that tone, the market will react to the dollar probably. Might not even move that much, perhaps. Sometimes that happens. So if the tone, if there's a higher chance that December will get a rate hike, we should see the dollar push and strengthen. If the tone is subdued and moderate, there could be some weakness in the dollar. That, I think, will be probably more of a factor. Dogan is asking if we can review the dollar. Your dollar, will do that. But first I will, so I don't repeat it for the others, we'll do that at the end. Just give me some few minutes. I'll take a look first at the AUD New Zealand. Z10, will it bounce now to the upside? Dollar yen, I think looking at this bar, I think there's a good chance. I think that the next, there could be a good breakout bar to the upside soon. But maybe even looking at this daily candle will say a lot. If the close is near the high, I think this trend line, this downtrend channel, will most likely break. All right, AUD New Zealand. Let me use a different template here. Okay. All right. So last week was a doji 0.1, which is, oh, hang on. Let me just quickly need to restart this. Hang on. So there was a doji last week after a series of downtrend bearish candles, as you can see. So that indicates already the potential for a reversal. And based on that, I think there's already a good chance that we might see a retracement here. But there are more things. First of all, we have the bottom on the left, right? Price is basically retesting that bottom. So if we put a fib, let me share you now the new screen again. All right, there we go. So we put a fib from the momentum to the, from the momentum bottom here to the momentum top. This push up, strong momentum. We see the price was also very, very close to the 88.6 fib. In fact, I was waiting for a 102 touch, but it didn't get there quite. Let's see where it probably got to. Yeah, 102. Okay, 102.34. All right, 28 pips from a weekly perspective, unfortunately, is not much. So it could have been the 88.6 pip bounce. Fortunately, not really getting the full kind of hit there, but yeah, it could be that this is the turn at the 88.6 fib. So there could be a substantial, I would say, potential for upside on the AUD New Zealand. Now, this is a long term. I wouldn't want to trade that particular. I mean, unless you want to keep a trade for months, I guess. I wouldn't want to trade this particular idea. If you don't mind, then maybe this is something for you to analyze and look into. But what I'm more interested in is a turn here on lower time frames off of the 88.6 fib. If we add the awesome oscillator, we see divergence between these daily bottoms. All right. So from that perspective, at minimum, I would expect price to go back to the long-term moving average, which I use is 144 EMA close. That's hanging roughly up in here, as you can see. So at minimum, I'm expecting a three-wave move up. That's the minimum. Minimum is a three-wave move up like this. But from a weekly perspective, we can see that the potential could be a lot more. In fact, what could start here would be perhaps a five-wave, maybe not on a daily, but on a lower time frame, like the 4-hour chart, for instance, or the hourly chart. And as soon as there's a five-wave, I think that is another signal that there could be more upside. I would expect an ABC. And after that, this buy right in here would be very interesting. If we get a five-wave like this and an ABC, one of the better buys, I think, could be after the ABC completes. What would be good to do is putting a fib from here to here on that five-wave, putting a fib on the wave A, looking for confluence between the targets basically like this, and looking for the golden ratios here, minus 61.8 and 61.8. That could be a very interesting trade. Otherwise, till that moment, I think it could still be interesting to trade within this potential five-wave here or three-wave. So let's see where that could happen. Let's take a look again at the daily chart. 1, 2, 3, 4, 5 candles here. Last week's high was already broken. So I think that there's plenty of things to look at, like basically a channel break here as well, and a falling wedge, etc. All right. So one way we could have been this 4-hour candle, this little retracement here. That was a good candle break, as you can see. That was one way of trading the continuation of this this movement. The other way could have been the head and shoulders here, right, as well. Another way, or the engulfing twin at the head and shoulders. Those are all past examples of potential trades. At this moment, those are gone, so let's move on. But you can see that those would have been ways of trading perhaps the bounce at the 88.6 fib and the doji of the weekly chart and the daily divergence as well. All right, and we see also here, remember, when you see two bullish candles, often enough that's or two candles in the opposite direction, that's very often the signal of a reversal. Not always, but many times it is. So here that could have been another way. So looking at the future though, I think that the only way at this moment will probably be on a lower time frame or retracement on the hourly chart. So what could happen here is we're getting a bit of divergence, but doesn't mean that a single divergence on the 15-minute chart will necessarily be the end. Something like a bull flag here, I could put a fib from here to here, like this, waiting for price to move down to the 38 or 50. That could be still a bounce continuation up to the minus 61.8 target. Let me now zoom out again a little bit, get a bit bigger context. If this is a wave 3, if this is a wave 1, and this is a wave 2, right? And this is a wave 3, and the wave 3 could push far. So it makes sense to potentially scale in or take a kind of riskier entry on the 15 upon a bull flag, because it could still push a lot if this is a wave 3. How far? Well, looking at the hourly chart, then I would have to put the fib from here to here. Conservative target, once again, would be more around 104, but a more aggressive target, if this is a wave 3, would have to put the fib here to here. We see a 61.8 bounce, right? And let me measure the number of pips here. 100 pips. All right, so 160 would be more likely. So let's add 160 to this bottom, 104.20. All right, so 104 seems the most likely target if it is a wave 3, but it could even extend further. 104.40, 105, it could go that far. And then if it is a wave 3, then we would expect a wave 4, which is a consolidation. A triangle, sideways pattern, bull flag will not retrace that deep. So if price does accelerate that far, it could be good to hold on, wait for the triangle to finish, and wait for one more higher high. Put a fib from here to here, wherever it stops. Wait for the 38.2 fib or 23.6 fib for price to hit that bounce and move up to the minus 272 target. All right, so that's if this really moves up a lot. Now, if this is not a wave 3 and this is a wave ABC, then it will, it would probably, what will happen is we will see not so far push up. So what could happen is that we don't see a bull flag here. It stops right here at this target. And we see a pretty fast momentum like this. That's over. Not interesting. Not interested in going long. That's it. Right? Does not look impulsive at the moment, at least. This could still be a wave 1, 2, but I'll deal with that later. I don't want to then trade it right now. In that case, I need to see ABC completed. Then I would think about long again. All right? So that's if it turns quickly at this target. If it hits this target, makes that bull flag that I'm expecting, right, like this, and then breaks higher, but still shows a very serious turnaround here, then I also want to be out, right? So in that case, I'll probably put the stop loss below this bottom or break even, and I'll be taken out with the bearish momentum. All right. So once again, if bearish momentum here, not interesting now. If there's a bull flag and continuation, and again a triangle, and then again a break, that's what I want to see. If there's any strong momentum to the downside after this push up, then I'm preferably out for break even. So trading waves 3 like this can be interesting, but it requires a bit more, I would say, a bit more. You have to be on the watch out, right? Sometimes to see how this develops. So that's my future plan based on all of this analysis. Now, if it does make a 5 wave, this is a wave 3, makes a triangle, makes a push up, that looks like a 5 wave. I would exit the target, minus 272 target of wave 5. I would expect an ABC, and I would try to buy it back here. And that one could be the most interesting, in fact, because there could be a huge push up on New Zealand. Okay, I have to wrap it up, folks. My battery is low. I'm in a different room because of or I can move because the construction has stopped. I can move to another room here and reconnect the power. That might be a better idea instead of rushing like this. Luckily, the construction work is seemingly a bit less, at least. Once again, if it does come back, sorry about that. All right, I got power again. So let's continue. All right, so those were the most interesting things I wanted to show you. Basically, the dollar yen upside, basically the bounce at the correction and breakout potential for upside, the euro dollar downside today potential, and the pound dollar downside later though after retracement, and this odd New Zealand, either the continuation now or the previous basically reversal, the continuation now, or the bigger bounce after a 5 wave has been completed. So let me take a look. Let me recap that right now for some of you that missed maybe part of it. Good morning, Caitlin. Maybe some of you came a bit later. So let's do a quick recap. In the meantime, 2 questions. When does a bull flag become a reversal? Bull flag becomes a reversal if it, first of all, bull flag should not go further than the 50 fib. So if it breaks below the 50 fib, that's not a bull flag anymore. Now, it's not necessarily a reversal either, but that's one thing. Uh, reversal, we would need to see basically divergence. We would probably see strong support and resistance levels. So it's a question of counting up pluses and minuses and what seems more likely. If there's a lot of resistance confluence, there's multiple divergence, then that flag is probably just a pause before the reversal. So there's not a quick and simple answer there. It's what at least what I do is look at the market structure and see which one seems more likely. Bull flags. Sometimes I trade the breakout if there's a good candle breakout, basically. So I look at the candle reaction on preferably one time frame higher or the same time frame, but of the breakout chart. Or I would trade the pattern after the pattern on the lower time frame. So you have a breakout here on AUD New Zealand, for instance. Let's give this example right here. We got a breakout of this mini triangle right here. This is the breakout candle. So instead of taking that breakout candle, it looks good, that breakout. The other way could be to look for a pattern on the lower time frame. I don't think we have it here though, but okay, let's say we were looking at the 50-minute chart. I don't have, normally I would look one time frame lower. So we don't have an example here, but basically we see a pause right here, all right? So that's basically the pattern after the pattern. This was the first pattern break right here. The pause after the break, the pattern after the pattern, and the continuation, in that case, indicates that there's less likelihood of a false break. Right? So that's another way. All right, so quick recap, what I'm looking at is reaction here. How's the euro dollar? It went up all the way to 111.50. So we got a doji at this demand, supply and demand zone, and this could be worth it right here as a potential turnaround for target at 110.80. If it breaks though above 111, stop loss in my opinion, 111.61-ish, and if it breaks that, then I lost a bit on this trade, 14, 15 pips, but my stop loss for the turnaround here, as indicated Monday, would also be there, and that would lock in anywhere between 30 and 50 pips if you follow me. So that would compensate some of this loss. This is a scaling, always more risky, but I think it's worth it. This is a good chance of a turnaround. This is a good chance of a retracement here. So I think this could be interesting for a potential short right now, in my opinion at least. All right, that's my view. Another way could be to wait for this retracement to finish. And then it uses, for instance, his ECS MACD for that. That's from his ACU MM system, which he uses basically developed for elite currency. That's the website that Nennet and I run as well. And so that if you use that system, you'll be looking for ECS MACD turnaround right here. All right, that will be one of the examples. Now, if it doesn't, if it keeps pushing, there's no entry. All right, it doesn't show it as yet. We see a 50-minute reaction, but not ECS MACD, a loosening of strength. So from this moment, for this perspective, it's still perhaps too soon for a short, looking at that MACD. Momentum is still to the upside. Maybe from a price action point of view, it could be safer to wait for an hour rejection. If it pushes through 111.60, I am not bearish anymore, and this could turn into perhaps an ABC zigzag like this. I'll have to see. I'm not bearish anymore. All right, so maybe the 1 hour candlestick is a bit better. Or if you use ACU and you use the ECS MACD, you can see when the momentum is finished to the upside. If you're more interested in that and other advantages, by the way, just wanted to note that if you sign up with us, through us with Admiral Markets, we have a special promotion going on that gives you access to some courses and a lot of material there, educational material, plus some extra advantages. You can collect basically some indicators that we share that we've developed. So depending on how regular you trade with us, you would get bonuses like that. All right, so that's something maybe interesting for you. Also, next week Monday, we're gonna basically Ned and I are having an extra webinar in the evening. So if you're interested in that, the best is just to send me an email, I guess. There, not only we will be talking, but Joseph will be talking as well. He is a trader with Admiral Markets, and he's going to show his system, a concrete system that shows basically a 100% track record, 100% return on his account with this system. So that will be shared on Monday as well. Plus, we'll show you the benefits besides the system that he's going to explain. We'll show you the benefits that we will have or offer for, I think, until end of October if you sign up with Admiral Markets. That's a good question. If you're already trading with Admiral Markets, then the best is also to send an email. There's too much info to communicate here, and I want to hold up the webinar too long. I just wanted to tell you, if you're interested, that could be something for you. I don't want to make it too extensive here either, but let me just write down here my email. So if you're perhaps watching the recording, for instance, you find it interesting, that you can reach me right there. That's my email, and it's in the chat as well. All right, so doesn't matter if you just want to join for that system, that's possible too. Either way, if you're interested in trading with Admiral Markets or just interested in the system, you can join us. That's next week, Monday at 8 p.m. Central European Time. And if you want to join, the best is to send me an email. All right? So with that said, the euro dollar is very close to invalidating my zone. So let's see if it will be a short or not. If it pushes, I'm not interested. Pound dollar, I'm interested in shorting it. Once again, that's the wrong fib. I'll change it. This fib here like this. That's 1 second. No, sorry, I had the right fib. This fib, I want to see basically, but I need to move the bottom here. Let's see. Here it is, sorry. All right, there we go. All right, this is the fib right here from here to here. That's the one I want for the moment, and I'm looking at a turn at 130.75. That's my primary interest of shorting. I think a stop loss above 131.60, 61-ish is good. I'm looking for a target anywhere 128.50 or lower. That's my my view on the pound. That's where I'm tackling it. Dollar yen, I'm already in a long, but if it breaks again, that could be a scale in. If it's a daily candle, specifically a daily candle, I'm keeping an eye on today. If it's like this, I might exit my long. That does not look good. If it's bearish, I exit my long. If it's bullish, I keep it. And if there's a breakout candle, I might add. That's my approach to the dollar, euro, pound, my game plan for the moment. And AUD New Zealand, basically, I already talked about it very much, but once again, 5-wave plus 3-wave correction. I'm looking for long. I'm looking for long if there's a bull flag or any triangle. All right. So otherwise, other than that, I'm really not that much interested in anything at this moment. I mean, the pound yen, all these crosses are moving not so interesting to me at this moment. I don't see anything that really catches my attention dramatically at this point. AUD USD, I talked about it on Monday, that could be a hook back here. Perhaps you took this one. Otherwise, it's pretty much gone at this point. Dollar CAD could be a triangle, could be a buy here, but I would wait after the news event today later. This is looking like a range. So we have 1, 2, third bounce. This could be again a bounce, or at least this could be the third bounce, but not yet. Other than that, let's see. Euro AUD bounced at the 50 fib. I think we talked about it. I didn't trade it, but perhaps I think we did talk about last week, but I'm not sure. Anyhow, it's still not at this moment. I don't think it's interesting. It could be easily a channel like this. It could be a bouncing spot, if anything, but there's bearish momentum. So no, I'm not really that interested in anything. If you're in a euro yen short like Caitlin, then that's great because it is going your way. It's just that now I don't think necessarily is a good moment to take a trade. Considering this 4-hour bar, I would definitely not be, yeah, exactly. The news made it strong. That does not really look that interesting at this moment. I would rather wait and see. But if you're in the shorts, then probably doing okay at this moment. I guess you could reduce your risk by trail stopping it if you like. I don't have any pound dollar buy at the moment in mind, unless it specifically makes a 5-wave move up here like this. If this is a wave 1, 2, it makes a wave 3, 4, 5. Then I'm waiting for ABC, and I would be buying here. Otherwise, I'm looking for a correction. I'm looking for the correction to finish at 38. I'm looking for a turn, and I'm looking for a break, bearish break below 129.50, below this support trend line here as well. This one, and a continuation of the trend, the downtrend. The euro yen will also, of course, be connected with this dollar yen. Let's see how that responds, how this daily candle ends. I think that could be a pretty significant candle to keep an eye on for probably all yens indeed. Alrighty. I guess that wraps up our my view, at least for today, folks. Regarding the market structure, I hope that some of that made sense regarding how you can look at patterns and combine that support and resistance trends to kind of understand the underlying direction. We'll be back tomorrow evening. Let's take a look at what webinar we have. I think, let me see, I forgot what the topic was, to be honest. Let's dive into that. You can go to admiralmarkets.com, click on education, click on Forex and CFD webinars. And it is, that was yesterday. Let's see. Oh, tonight, sorry. Tonight, Nanette has MACD patterns. Now, tomorrow we are looking at, how you can get more confidence in your analysis, basically, right? So how can you solve the lack of confidence in analysis? So we'll be looking at that tomorrow evening. Otherwise, next week, back into more of a full swing because there will be a webinar on the basically live market trading, but also strategy, or there should be. Yes, there is indeed. So I hope to see you then tonight and tomorrow, and wish you all good trading. Catilan is still saying, no, I'm not sure about that at the moment. But if you could, I could write for you that. Maybe, I think the one way could be to write a note or a comment, but I can ask for you, Caitlin, and I could, I'll do that right now. All right. So if I get an answer, I'll send you a message. Let's see. The start time for the MACD is, no, it should be, the start time should be 6 p.m. But it looks like it's an hour earlier somehow. I'm not sure if Nenad is aware of that. Maybe that's by accident. I'll check with Nenad. And I guess that if you signed up, you should see a warning that the time has been changed if that's the case. At this moment, I think it's 5 p.m. Dutch time or Central European time. It should be 6 p.m. normally, so it could be an hour later. So I'll talk to him about that too. You get 19 o'clock? Well, I think that could be maybe something with your computer time, or perhaps even has to do with the website time somehow. That's difficult for me to comment. I'm not sure where you see that. And let's see, join the webinar. Yeah, the time here, is not precisely accurate, unfortunately. 7 p.m. Oh, that's strange indeed. All right. Well, I'll check with Nennet. For the moment, though, I think you'll get a warning through the email when it starts, or an hour beforehand. So I think that's probably the best to keep an eye on that. All right. Well, I'll check with him now. All right, folks. Thanks for your comments, and talk to you soon. Wish you good trading. Cheers.